And welcome to Monday Market Watch. And today I'm going to discuss why I think the market or the stock market is a nutty market. But before we get into that, I want to give you some economic updates. We still have over 20 million unemployed Americans. And I think in 2008, 2009, the Great Recession, there were 7 million. So we're double that number. Now, some of these jobs will come back, but most will not. So even if we cut that unemployment number down in half to 10 million, you're still at recessions, depression like unemployment numbers. Yet the stock market is still marching, to all-time highs. Now, two reasons why that could be the case. Number one, the Fed is pumping a lot of trillions of dollars into the economy, and most of that is going to the stock market. So I give you that. And number two, interest rates. Real rates are at negative and nominal rates are getting close to zero. So when interest rates are this low, there's no competition when you're talking paper assets. The money market accounts aren't paying you any interest rate, any interest. You can leave your money in the bank account and you're not getting any interest there. So stock market is going to have a lot of people flooding the market looking for value, either on the capital appreciation side or the dividend side, or both, right? So I understand that, but the market is overvalued, and I have some metrics to back up my theory. First up, I've listed the top 6 car companies, okay? So Ford, Honda, Nissan, General Motors, Fiat, which owns Chrysler, and Toyota, which is the behemoth. Okay, in the second row here, I've listed the market cap valuation. Now, we're not talking intrinsic value and free cash flow and tax rates and all that. We're simply taking the outstanding shares of a company and multiplying that to their stock price, right? And that's what the market calls their market cap valuation. So Ford is at 27 billion, Honda's at 46 billion, Nissan 36 billion, General Motors is at 40 billion, Fiat at 23 billion, and Toyota's at 220 billion. Now, I've also listed Tesla down here, and Tesla's market cap is at 371 billion. $21 billion less than all 6 of these companies combined. Let that sink in, okay? And our last column, I've listed the car sales per company for 2019 numbers. So as an example, Ford sold 5.4 million units, or 5.4 million cars. Honda sold 5.3 million cars. Nissan 1.3. I'm going to skip GM. Fiat sold 703,000. So that number is, greatly reduced from the other behemoths. And Toyota, which is the biggest in the group, sold almost 11 million cars in 2019. Okay? Now, how many cars did Tesla sell in 2019? 368,000. They sold the least amount of cars in 2019. Now, I don't know what the numbers are and the projected year-to-date numbers for 2020, but 2019, they sold a fraction of vehicles. Now, one could argue and say, okay, well, that's fine. The legacy cars sales are on the decline and Tesla's on the rise. Well, you got to remember 2017, 18, and maybe 19. I'm not sure about 19. The car industry sold a record number of cars. So 2017 record number, 2018 record number, and I think it might have peaked in 2019. So even if 2019 peaked or even declined, it declined by a little, not very much. So they're selling record number of cars. Tesla is not in that mix, okay? Tesla is selling 368,000 cars. The other argument is, well, Tesla's not a car company. It's a technology company. The founder, was part of the PayPal mafia, and he's a tech guy. Make no bones about it. If Tesla does not hit their sale numbers when it comes to selling cars, their stock goes down. So they are a car company. You can talk about the battery and all this technology. At the end of the day, they're in the business to sell cars, and they're not even selling as many cars as Fiat, which is the least amount for the legacy group. So I got to ask you, at $371 billion valuation, which Tesla currently sits, $21 billion from all of these companies combined, is Tesla overvalued? In my opinion, using just these metrics, I'm not even looking at price earning ratio or price to book or prices, just these metrics, Tesla is grossly overvalued. Okay, we're going to move on. We're going to move on to e-commerce versus brick and mortar. Amazon versus Walmart. Both are giants in their own respective group. Amazon's market cap Get this. I don't want you to choke, so finish whatever you're eating or drinking. $1.6 trillion of market cap valuation for Amazon. So you say, okay, well, all right, I guess that makes sense. It is Amazon. Okay, well, what's Walmart's market cap? They got to be, 1 trillion, 900 billion. Walmart's market cap is at 370 billion. That means Amazon's market cap is 4.5 times bigger than Walmart. Okay? That's massive. Now, let's look at the sales for 2019. We're going to start with Amazon. Amazon sold $321 billion worth of goods. That's very respectable. But Walmart sold $542 billion worth of goods in 2019. Walmart was one of the few stores that was open every day during the first phase of this pandemic. Now, their hours might have diminished, but they were open every day. Now, one could argue and say, well, Amazon never closed because it's online. That's fair. One could also argue that Amazon is a little bit more diverse. They have cloud play. They have, hardware with Alexa. They have, of course, e-commerce. And all of those are plausible arguments. But again, 4.5 times bigger than Walmart as far as market cap is concerned. Okay? So either Amazon is grossly overvalued or Walmart is grossly undervalued, right? But there's a major disconnect between the two, okay? And not to mention that Walmart has improved their e-commerce game, right? They bought Jet a few years ago, Jet.com, and then they're also selling, their online business has picked up tremendously. It's a lot of growth for their online business. So Walmart has nothing to sneeze at. And I'm going to leave you with this last point. Let's just say that Amazon is gaining market share. Okay, there's still a duopoly when it comes to selling goods, either online or retail. It's Walmart, it's Amazon, and it's everybody else. Let's just say Walmart has 55% market share, Amazon has 40% market share, and then everybody else has 5% market share. Okay, so even if Amazon starts to chip away at the other players, there's still not enough market share to warrant 4.5 times being bigger than Walmart, but I digress. We're going to move forward. Okay, lastly, we're going to go to media companies, okay? And I'm going to give you the media companies for our local channels here in the DMV area. So that's channel 4, 5, 7, and 9, okay? So we're going to start with number 4, even though it's not in order of this chart up here. Number 4 is NBC, and it's owned by Comcast, okay? Comcast, and they also own CNBC, MSNBC, and some other companies as well. Their market cap is currently at $199 billion, okay? Now we're going to move on to Fox, which is channel 5. Their market cap is $16 billion. And I think Fox sold off some of their assets. Comcast and Disney, they were in the bids, I want to say last year. So that market cap is probably reasonable at $16 billion. Channel 7, which is ABC, it's owned by Disney. Disney also owns ESPN. They got the theme parks. They got Disney Plus. Their market cap is at $236 billion. Okay, very respectable. And lastly, you have CBS, which is Channel 9. It merged with Viacom. Viacom owns BET, MTV, VH1, Paramount Movie Pictures, I believe, some other assets as well. Their market cap is at $17 billion, okay? Now, I've compared this media group with Facebook because Facebook is a social media group, right? Or excuse me, a social media company, okay? Their claim to fame is selling ads, okay? Just like these companies, their bread and butter is selling advertisement, right? Every time you turn on your TV and you see a commercial, somebody is paying that company to put their commercial in that particular spot. So they're selling advertisement just like Facebook is selling advertisements as well. Facebook market cap is at $770 billion, okay? So I want to say there's 4 current market cap companies that are at $1 trillion or over. So Apple's at $2 trillion, Amazon 1.6 trillion, there's Google, there's Microsoft, and Facebook will probably be the 5th sometime soon, okay? That's what it's looking like. They're pushing it towards that number. So if we add up the market cap for all 4 of these media companies, their market cap is at $468 billion. So Facebook is almost double that market cap size. Now, let's look at sales. 2019, Facebook brought in $75 billion in ads. That's very respectable. Very great number. They're growing like rapid fire. Okay. Disney brought in $69 billion in 2019, and Comcast brought in $100 billion of sales in 2019, which is bigger than Facebook. So again, one could argue that Facebook is growing like wildfire, and I get it. Look, Facebook is it's a tech company, and they're growing like crazy. But again, they're an advertisement company at the end of the day because that's their bread and butter. Okay. And these other companies are ad companies too. So you gotta say, okay, well, where do you place the valuation, right? So again, if Facebook is growing, and it is growing, but so is Disney. And not only is Disney growing, they got Disney Plus that's growing like wildfire, and they have theme parks. So they have tangible assets to kind of help back up that valuation. Whereas Facebook has Oculus Rift and it's not nothing. So is the market overvalued? In my humble opinion, I would say so. These are companies that prove it. Okay. Now, one last thing so I named, Apple, Amazon, Facebook, Google, and Tesla, Microsoft. So these are 6 companies that really move the markets, right? Because you got to remember the Dow Jones is an index, S&P, NASDAQ, these are all indices, and their stocks that are in these indices it's measured on the size of the company. So it's weight averaged, these indices are. So the bigger you are, the more you can move a market. So if these 6 companies have an update, say they're up 1%, even though the rest of the 5,000 companies listed in these stock markets are down, it's going to move the market up. And the inverse is true as well. So it doesn't take a rocket scientist to see that there's a small subgroup of stocks that are really pushing the market higher. And once they turn, that whole thing is going to implode. And they're already, in my humble opinion, are overvalued based on their market value in their respective industries. So, I would look to kind of short these stocks. Now, listen, the market can continue to run. It can continue to be delusional for a very long time. There's no timetable. But when it does finally realize, these will be the first stocks to get hit hard because they're already grossly overvalued, in my opinion. So there you have it. Okay, hopefully this helps you out, and be wary of these companies that are high flyers, because yes, it's pretty when they go up, but it's extremely ugly when they go down. Okay, thanks.